SVB's collapse and how that might impact VC funding in Southeast Asia. Vinnie Lauria of Golden Gate Ventures will be joining us after the break. Street will be back in 2. Welcome back to The Street, and in line with the coverage that we have been bringing you in terms of the SVB collapse and its impact on the tech ecosystem, it's not just the United States that could potentially see some pain. What about Southeast Asia? What about the vibrant tech ecosystem that we do have here? Here to discuss, Vinnie Lauria is founding partner at Golden Gate Ventures, joining us live now from Ho Chi Minh City. Vinnie, thanks so much for being here. Just firstly, now, there's a lot of interconnectivity between, startups in the US, between the VC funding in the US and across Asia, and there's probably a lot of interconnectivity from Asia back over there if we're talking about the likes of SoftBank. But in terms of, I suppose, the significance of the 3 banks that have now collapsed and we don't have a resolution yet, is there an adequate replacement for startups, for VCs, in terms of all of the bespoke features that those banks provide?
So for the word replacement in terms of features they provide, in the US, that is going to be hard. But the reality is here in Southeast Asia, a lot of the startups were really buffered. Most did not bank with Silicon Valley Bank. We were a client, a customer of them, so understand the value add very well. Fortunately, we had less than 1% of our portfolio associated with them. Out of our entire portfolio of 70 companies, 2 actually banked with them and didn't even put full banking with them. So the reality is Southeast Asia is already very isolated from what was happening in Silicon Valley. This has actually been helpful to Southeast Asia. It now looks like a golden child to US investors. Investors are starting to say, I want to diversify. I want to diversify different bank accounts. I want to diversify to different geographies, different currencies. And this is where Southeast Asia is really has a time to shine in light of the situation.
Vinnie, before we move on, when you say less than 1% of our funds, I would reckon you're saying like a very minuscule amount, a couple of million?
Yes, correct. Very minuscule amount. And which, again, It's been Fed's backed it up. And so us and the few portfolio companies, we've been able to actually work and talk with the bank and fully get understanding what's happening.
Okay, so what is your advice right now if you're saying that Asia can gain somewhat with the whole diversification drive, then what is it that you're telling companies to survive and thrive in this environment?
So I'll break it down to 2 things. The reality is globally, investor confidence is a bit shaken. And what does that mean? And so startups need to understand that. And if there's uncertainty ahead, that does make conversations a little bit more difficult. But when you compare Southeast Asia relative to other markets on a global stage, this is where it's time to shine. It stands out as a golden child. There are institutions in the US, VCs, institutional investors that now do sit on money and assets and want to invest that in a place that they think is going to be a safer investment, a place that's going to also have high growth. And this is where Southeast Asia stands out relative to Latin America, Europe, Africa, and even the US.
From a liquidity standpoint, so diversification is one angle to the story. The other angle is stress testing. And it's not just true for a bank or a fintech company dealing with financing in and out. It's also true for any company out there trying to manage their balance sheet and their financial health in terms of, the asset liabilities that they hold and the exposure they take for maintaining their running cash flows. Reinvesting them, and then of course trying to make the most of the market opportunities out there. And so how are you looking at that? What are you telling your clients, more importantly your portfolio companies, on how they must stress test their businesses to survive this downturn?
So great question. Number one is who are you banking with? And this is where Singapore is a safe haven globally. Companies like DBS have phenomenal amount of reserves. They don't look anything like Silicon Valley Bank, yet they offer some of the credit facilities. So number one is really understanding who you're banking with. And we did a full audit with our portfolio from Friday through Sunday. A lot of my team was up in the middle of the night as we did that, and then helping companies understand if they should move to a safer bank, what does that look like? The markets are clearly safer now, but there was uncertainty then. So that would be number one. Number two is that with uncertainty ahead in global markets, fundraising can be more difficult. And so you want to be prudent. You want to be prudent with your spend. If companies haven't made head cuts yet, which a lot of tech companies have, this is something that they should be thinking about because it extends their runway and it gives them more optionality to take a longer time to speak with investors. So I think the real theme here is that investors are going to be conservative, but Southeast Asia relative to other geographies as an asset class really floats to the top right now. And so markets like Vietnam and Indonesia, that is where the world's growth is going to come from. The IMF did a report in terms of GDP growth forecast for the next year and a half. And two of the countries on the top of that global list are Vietnam and Indonesia. So investors are looking to these markets. The Gulf, which sits on a lot of capital, also looking to Southeast Asia. We did a report in December. Last year, investments from the Gulf region into Southeast Asia grew by over 600% from the year prior. So a lot of regions around the world are looking to Southeast Asia.
So in terms of the austerity that you're suggesting for a lot of these companies, but how do you balance that with the need for growth? Because obviously we're talking about startup enterprises. They've really got to be running fast in order to make their money and get to the point where they're going to be accessing funding.
Phenomenal question. So this is a VC philosophical question, and some VCs are the growth. What Golden Gate Ventures has been advising our companies is don't do growth at any cost. This is much more of a kind of weighted out, and so you don't need to show growth, but you need to show really good unit economics. So for a lot of the companies I sit on the board of, the discussion is really about what are your unit economics. It's okay to cut growth, but how do you make the company a healthier company? And these conversations for large startups that are well capitalized are easy to have because they don't need to fundraise this year and they can wait it out. They can raise 18, 24 months out.
Right. Vinnie, we are running out of time very quickly. What does this mean for the fintech ecosystem, which is so tied in with the cross-border payments, tied in with the democratizing the whole traditional banking system? On the innovation side.
Yeah, positive. I can say because we're investing in a lot of fintech companies because of the speed of opening accounts, working cross-border, being able to do everything self-serve. There's been an explosion of a lot of these digital banks, neobanks here in Asia. So just like COVID would somehow helped the ed tech sector and the health tech sector because people were turning online, this has actually helped a lot of fintech companies in the fintech sector.
Vinnie, good to have you on the show. Stop by again sometime soon to give us a sense of what's happening in the region, because this is going to be a hot topic for a while. Thank you very much for your insights and thoughts. Okay, take a break for now. We'll be back talking more about the Fed's move next. What will they do? We'll let you know.